Good morning. I am G as the winner, and that is President Harris, and we are welcoming you to do the stream this morning.
Well, hello everyone. I guess if I'm President Harris, I'll greet you all with a.
Yeah, right. Just start talking a whole bunch of word salad.
Hey, dude, I got a question. All right, I'm 54 years old. So,
Yes.
what am I? Or am I Gen Z, or is that younger?
No,
Do we
you're
have a term
Generation
for
X.
what's that?
You're Generation X.
We're Gen X.
Yep. Do you remember
All
seeing
right,
Michael Jackson's hair getting burnt off in the Pepsi commercial?
I do actually.
You're Gen X.
Yeah.
That's how you can tell. That's how we're. If you remember Michael Jackson getting his hair burnt off, you're Gen X.
I remember Michael Jackson when he was still a man before he went
Dude,
through his
you know
whatever.
what? I know Michael's a freak, but I am a serious Michael Jackson fan. I
Well, the
just can't
guy's
help
got
it.
talent, but he really
He
just
was a
it's
weirdo.
just a shame what happened to him.
Yeah.
All right. Anyway, so these are expressions that supposedly we're sick of. Period. Glow up. I've never even heard that one.
No, me neither.
All right. So let's go see what's going on in our markets today. Oh, you know what I wanted to point out is Macy's reported. All right.
You know, I will say one thing. When someone says sus, I automatically shut them down. I can't even hear them after they say the word sus.
My daughters are use that a lot.
Yeah, I hate that word.
I think it's because so much communication happens on phones. It's like you don't want to type out suspicious or suspect.
Right.
Yeah. Whatever.
Go
All
ahead.
right. Oh yeah. I just wanted to kind of point out some of the absurdity of Wall Street on Macy's here because let me go to the news. Whoops. All right. So these guys had estimates of 20. I think it was 29 cents, and they came in at zero. Well, actually, this is not what I was looking at. What they said on TV this morning. Analysts pulled by a capital IQ. They said that the estimates were like 29 cents. They must have had a mistake. But anyway, I just wanted to point out, and I guess this is not a really good example, but it just shows how wrong some of these Wall Street people can be and why there's really no need to listen to them, like in terms of the research and so forth. Let me just go. I want to just go see over here because I know for a fact that I saw that this morning on whatever show I was watching. Maybe it was just a mistake. But you got to understand that these companies that put out research, they also do investment banking business, and they make more money from investment banking than they do from putting out their research and getting trades. So the analysts are going to be very reluctant to be negative on a company because eventually, if that company needs some investment banking business done, they're like, I'm not going to call the guy that just downgraded my stock.
Right.
You know?
Right.
So let's see here. So these are the people. Oh, these just have price estimates. This doesn't have. But anyway, it's important to remember that, you just I tell people, like, the older I get, the more I realize, or the more I think it's like you should just ignore the news because so much of it is wrong. It's just so much of it is like filling whatever, just trying to fill space. But anyway, like, say you're at Citigroup and say you think Macy's sucks, and say you're the analyst that covers you're one of their retail analysts, right? And you cover Macy's, and you're like, this stock sucks, it's going out of business. Well, if you put that out in a report, the next time Macy's needs like a bond deal, what are they going to do? They're not going to call you. They're going to call the person who's positive on the stock.
Yep.
Right.
Yep.
So anyway, I was just thinking that this would be a potential for a reversal trade here. See, we're trading here. The most famous story of that is Janney Montgomery Scott. I think it was back in the 80s, where their analysts wrote that like Trump's casinos were going to go bankrupt, and Trump called up Janney Montgomery and he got the guy fired. But you know what? Karma helped the guy out because the guy is still riding that, and he has a very successful career.
Yeah.
So, wait, here's where the stock is now: 1370 in the pre-market. Yeah, 1350, let's call it. And this black line is, oh wow, look at that! It fell below it already, just in the last. Man, right? When I first started looking at this, I said, man, if we get back below this black line, this is a potential reversal there.
And it did it already. That's wild.
Well, I would wait till probably if this is something that you're interested in. These things, if a stock opens up really big or opens down really big and eventually reverses during the day because the news isn't as good or as bad as it first appeared, these moves tend to happen around mid-morning, like anywhere between say 10 and 11 o'clock. So if come 10 and 11 o'clock, this thing starts to trend lower, there's a good chance it keeps going. And the reason why that happens is because you got these investment teams or funds are out there, and right now they're all kind of going through the numbers, thinking like, is this really good? Is this not as good? If it's these numbers are good, but it's not as good as people think. It's like, all right, well, we own a big position in Macy's. Let's take a little bit off the table. If it comes back down, maybe we'll buy our position back, and so forth and so on. So let's see what Barron says. So they earned 21 cents a share. Yeah, I guess what I saw on the news, it said yeah, I guess what I saw on the news was wrong. All right. Anyway, we'll look at that again. Let's go look at the S&P because we're kind of stalling out here.
Yeah, they're still down over the year from 52 cents to 21 cents this quarter. That's pretty bad.
Well, I think that's I'd have to really go through the numbers, but that could be like an inflation type thing.
Yeah.
People are starting to cut back,
Right.
And the first thing people cut back on is food. They don't go out. Not that Macy's sells food, but food, luxury goods.
Yeah.
But this maybe inflation finally is coming down because that PPI number was down yesterday. Yeah, so we're kind of pinned right at the 450 level here. So just notice now over the last few days, right? So we got to this former peak, which is 450. So it's also, you could say it's a psychological level. People like the nice round levels. Let's see actually what it is. All right, I'm going to actually tweak this to say what we used to say, what us Gen Xers would say, 450 and a half. So on, what's today, Thursday?
Yes.
So on Tuesday, the high trade was 450.06. Yesterday, the closing trade was 449.68. This morning, we're at 449.16. So this is a $450 security, and it's trading within, how many basis points of this perfectly round level. And it's not a coincidence that this is where we hit resistance. We hit resistance here because it was resistance here. So when we get to a peak, when we make a peak or when we make a valley, those levels sometimes take on importance. Not always, but sometimes, and actually I would say probably more often than not. I mean, not always, but think about this. Say you're the guy or the girl who, this thing's blasting off. I'm going to go buy. So back on September 14th, you bought this at 450. And then all of a sudden the next day it just kind of falls out of bed. And I don't even remember what this was. It was probably like something to do with inflation, but it's like, this sucks. I made a mistake. If this ever gets back up to my price and I can get out of break even, I'm going to go do that. So you get these remorseful buyers from back here placing sell orders over here. And that's the psychology of buyer's remorse turning resistance into resistance again. Now, remember, the longer that we stay here, well, I mean, I don't know exactly what's going to happen. Obviously, no one does. But a dynamic that could potentially happen here is there's obviously a lot of sellers at this level, right? When we're moving higher, There's not enough supply to fill the demand. We're out of equilibrium. When we get to this like 450 level, all of a sudden we're in equilibrium, and there may be more supply than demand, but the sellers are kind of holding off. In other words, maybe you got 20,000 shares to sell, but you're only selling maybe 1,000 or 2,000. You're just kind of holding off. Then after a few days, if you notice, this thing isn't going any higher, that means there must be new sellers coming into the market. So you start to get worried that you're going to miss out. So you reduce the price you're willing to sell at. Now, like coming from an institutional role, I could call my broker and be like, all right, dude, I got 20,000 of these 20,000 SPY to go at 449, right? And then, it starts to go to 448.90. Then I start, and now because I told them I tell them at 449, they have to go to that price or better. I would always give them a little bit of flexibility. But then then it's like, all right, so these guys are 449.80. I'm going to go to 449.70, so forth and so on. And you start to get this, sellers undercutting each other. And this is why a lot of times when we get to a resistance level like here, all right, we sell off. Sellers get nervous. It's like, geez, this isn't going to go higher anymore. Must be new sellers coming in, and they start to undercut each other. Same thing here. You get to resistance and you sell off. You get to here's a level that was support, and then we have our buyers. This is not a different kind of buyer's remorse, but it manifests itself in a different way. You have people that bought back here that are like, market's lower. If it gets back to my price, I'm going to get out at break even. So levels that were support can become resistance because of buyer's remorse. Levels that were resistance can remain resistance because of buyer's remorse. It's all psychology. And if you don't look at these charts through the prism of psychology, you're never going to be able to figure this out. It's just not, you might as well just forget it. I mean, I've seen people for years and years and years and years. It's just so ingrained in our, I don't want to say culture, or I guess maybe our financial culture. It's just so ingrained that every little move in the market has to do with some type of, ulterior macroeconomic news story. And like I just explained, this isn't selling off because of whatever news was. This is selling off because of psychology, because you got your, sellers undercutting each other. We get to support. It's the opposite. People see the market stop going lower and they start to think, there must be new buyers coming in. I better raise the price I'm willing to pay, or the sellers are going to go to someone else. So you rally off of support because of psychology, right? You go down because of psychology, you go up because of psychology.
Mark, I want you to look at TSM if you could, and then Maru would like you to look at Target.
All right, I'll get to those in a minute.
Yeah.
All right, so here's our tech sector. So still overbought and also at resistance. Now let's keep in mind the scale here, right? It's like this is $181. So we're only 74 cents above it. So I talk about levels, but it's usually more of a zone is the proper way. You get some really clear levels on these ETFs, but just because it's $1 above it doesn't mean that it's broken out, but it is still overbought. So we got to keep an eye on that. And then in our healthcare sector, I would say that's kind of trading flat there, but it's, had a little nice recovery. Financials. Now here's another sector too notice how it ran into resistance at a level that was resistance. So this is the same principle here. The reason this didn't stall out here out of coincidence, right? This is 34.85, and yesterday's high trade was 34.69. So it's not a coincidence that this is where it hit resistance. It hit resistance here because it got to a former peak. And you can just see this 33.60 level, how important it was. It was support, then it became resistance, then it became support, then it became resistance. Then once we got this is one of the dynamics I talk about. People want to know, how do you know if something breaks resistance? Is it a real breakout or will it reverse? Well, notice here, we got above the resistance and then we spent some time consolidating or trading sideways. So what was resistance converted back into support. So when you get this resistance, when resistance appears to be broken and then it spends a couple days and or whatever period of time, you're looking at, if it spends some time and that what was resistance converts into support, that's usually a sign that you're setting up the stage for another move higher. And then that's what happened there. All right. So consumer discretionary. So this guy's kind of, I would say this is probably pretty neutral, right in the middle of this, clear support becomes resistance. And I'm going to just, oops, what the hell did I just do? Yeah, so up here. So this is pretty, this could be fairly volatile, this sector, because it doesn't look like there's any real clear what will be support or resistance. You got like 163 and like 175. So there could be some volatility plays in here over the next, the next time period. It's probably pretty unlikely that this is going to go sideways, but we could revisit that. I just want to finish these sectors here. The industrial sector, here's another example. All right. I mean, you can just see this everywhere. Look at where this support level was, right? So this is 10. I'm going to pull a Gen X and go down to 105 and a half. And look at where yesterday's high trade was, 105.72. So it's not a coincidence that this is where it stalled out. And now this morning it's trading sideways. There's resistance at this level because it had been support. So it looks like the theme is, we're overbought and probably going to consolidate. Because, markets don't just go straight up. So did you see now that the Eagles have a Christmas album? Like the Eagles, the football team?
No, I did not.
Yeah, dude. Serious.
Why? Do they sing well?
I don't know. I want to listen to it.
I mean,
I think on my blog today, I'm going to do something about how this could become the next Super Bowl shuffle.
Well, they got to get to the Super Bowl first.
I don't know if you. I suppose people are too young to remember what the Super Bowl shuffle was.
That was the Iggy shuffle.
Yeah, they beat the Patriots. The 86.
Yep, Jim McMahon. My man used to like the helicopter. He'd fly over people and get smacked around.
Yeah.
He was a bear.
Yeah, it was the Bears.
Yeah, it was the Bears.
Yeah, the Super Bowl shuffle.
Yeah.
Remember Williams Barry?
Yeah.
The refrigerator.
Yeah. I was thinking the Iggy
during
shuffle.
One of the Super Bowls.
The Iggy shuffle is the guy from the Bengals. Iggy Pop.
Yeah, I'm talking about the Super Bowl shuffle, where it's like, I could make some comments, but it's like, yeah. Why is it that the white guys look so stupid when they try to dance? I don't know. There was a during one of the Super Bowls, they went and they found all the guys that were in the Super Bowl shuffle, and every single one of them was like, I'm so embarrassed by that thing. And then there was one guy who was a farmer who was like, "What are you talking about? It was great. I watch it all the time." All right. So anyway, Target blasted off, coming back in a little bit this morning. Notice how what was support, this is kind of your important price level here. And that was where, so we spoke about this yesterday morning. It was 125 in the pre-market. And let's see what time it really started to move up during the day. All right. So this came right out of the gate. And this goes along kind of with what I've been saying. It's just like, if you get a really big move out of the gate and it turns out the news is really good and people go through the news and they say, you know what, these numbers are pretty good. So there's no selling, and then it traded sideways. Sometimes it goes up, but if the numbers weren't as good as people thought, usually like right around here, like 10, 11 in the morning, it's going to start to trend lower, because this gives time for these analysts to go through all the research and all the numbers and update their models. And they might say, my model says this stock is worth 126. It's trading at 130. Maybe we should go sell some. So there's usually a little bit of a delayed reaction. But if the numbers are really good, then you get something like this. It either trends higher around after 10 or 10:30, or it goes sideways. So let's look at the 5-day here. Sounds like your dog's hungry.
No, man, my daughter's home, and that's the only time. Boy gets so excited when she's here. It's not even funny.
Yeah, my kids are. Ava's coming home on Tuesday, and I'm not sure when Lila's coming home. I probably have to go get her. Yeah. All right, so here's a 5-day, and I don't know. Like, looking at this, it's kind of hard to find something, but I would say down $3. Maybe if this gets back down below 125, then then you start to look at it as a reversal, because it could potentially refill this gap here. Let's just see. All right. I mean, usually we don't really pay attention to this stuff, but you know what? Here's a perfect example, right? All right. So these guys upgrade the target, and they go. Oh, okay. Yeah. All right. Look at this. They cut the price target. Wait a second. All right. Target downgrades, and they cut their price target to 148 from 161. Okay. I guess that makes sense. So they're at 161. Wells Fargo upgrades to 148. RBC low. Sometimes you can see like a theme. Trend seemingly lowers price target. So all the price targets are still. Oh, here we go. JP Morgan raises price target to 125 from 113. So these guys look like they were the bears. Yeah. So I would I would watch this for a potential reversal. It's given back some of yesterday's gains. So maybe, overnight people have said, well, I don't know about this whole target thing here. The other thing too is you can never look at these like stocks in isolation, because there's going to be other things going on that affect them other than just what's going on in their company specific news. In other words, this is a retailer, right? If another retailer comes out and has really bad earnings, it might trade down in sympathy. Is Walmart? Is this Walmart? Damn. Wow, Walmart's getting crushed. Yeah. So sometimes sectors trade together. That's a style of momentum trading that's out there. It's like, oh, all right, well, this one retailer is down. Let's just start shorting the sector. Let's just start shorting all the stocks in the sector. And that's a style of momentum trading. I wouldn't recommend it to newer people. But you can't just look at this stuff in isolation. Now, we saw that the S&P, right, is pinned right against this resistance. It's overbought. So these set the stage for overbought, and at resistance set the stage for a move lower. So if the S&P starts to move lower, Target's probably going to start to move lower. And if the S&P makes a meaningful move lower, well, then maybe Target smashes right back through that 125 level and keeps going. So you got to kind of know what I don't know what would be a good analogy for this, but you got to kind of know what's going on, like kind of all around you, because this stock is not just going to trade in isolation. But I guess, if your style is you just want to focus on one or two things and you can pick it up, then that's cool. But I'm just saying, like, a big part of what's going to happen here is going to be based on what happens over here in the interest rate market. So if interest rates start to reverse and go higher, That's probably going to bring the S&P down, and that's probably going to bring Target down. If interest rates hold or go lower, I don't know if the S&P would really move up as much as it would move down going the other way because it's overbought and it's at resistance. So if I was watching Target, I would have Target on my radar screen as a potential trade because it's just trading right above this big gap. And if I started to see other things in the market, like, okay, interest rates are moving up, the S&P is reversing, looks like Target's now trading down to like 124. It's like, okay, now it's time to go buy puts. Maybe this gap gets refilled and my target would be down around like 115, 114.
That is a tasty gap too, boy.
You
got TSM.
The IWM is the Russell. That's the Russell 2000.
Don't forget about TSM.
Oh, okay. Yeah, okay. Yeah, so this is the Russell 2000, Heather. Is that what you're asking? Which index to IWM? Yeah. So that's your Russell 2000, and then your IWN is the Russell 2000 value. But IWM is the Russell 2000. So let's see, TSN. Man, I'm trying to read my notes, and I just write so sloppy I can't even.
M, a mark, not N. TSM.
Oh, sorry. Private stocks, TSM. So now this is another thing that's going to trade with the market, right? If we saw that tech is overbought and could potentially reverse, this is right at an important level, right? So we're just going to clean this up a little here.
So, Di, this is going to go with all the chip makers like AMD, ARM, NVIDIA, Intel. They should all be kind of moving together when this thing moves. Or not,
Well, it's kind of the one thing about trading and the market. It's like, the market's always kind of evolving, doing different things. That's why it's important not to worry about the market, and it's important to worry about your own psychological makeup and are you following your plan or not.
Right.
But look at this, how precise this level is here. So I'm going to go Gen X and call this 98 and a quarter. All right. So 98 and a quarter was resistance in February. Then it became support from June through July. And now it becomes resistance again. So it's overbought. It's at resistance. I don't know if there's any news pending. I mean, if you're going to trade it, you should probably check into it, or if they've already reported.
I would look into what Biden and Z talked about yesterday and see if any of this, because they're still in Taiwan.
I was reading some scary stuff yesterday by, Ray Dalio is no fool, right?
No.
Unless he's just going crazy when he's getting older. And he's like legitimately talking about like we might go to war with China. And it's like,
Mark, China has been posturing for a war for a long time. We're the fools.
Yeah, but what if they go to war with us? We stop buying their goods and their economy collapses.
They don't need us. Well, they don't want us. They want us to be number two, not number one. And we and our politicians, especially like our people on that western coast there, that Chinese California section we have of Florida, of America, those politicians there have sold us to China, and then a lot of other ones in Washington, D.C. And if you look back, I mean, those Chinese people have been paying for a long time, and they play a very long, slow game. And we're up here getting everybody incited, and everybody's got to be on a 2-minute schedule and then live in a 15-minute city, and everything's got to go so fast. But these people are methodically hammering us down, and they're doing it without.
Yeah, but that doesn't mean they're going to attack. What are they going to do? Invade California?
They're going to take Taiwan.
Well,
you need to look and see how far the American military has expanded its bases and where we have everybody cornered in. These, I'm a patriot. You got to understand, I love America and I believe that we are what we are. But we are also a little intrusive in other people's lives, and we need to back off and come back to our own country and we
Yeah, but
deal with our problems.
it's mutually assured destruction. I mean, both countries would be destroyed. It was like,
Yeah, sometimes it doesn't matter.
yeah.
Look at what the UN's done here with Ukraine. They knew when they signed those agreements back in the 90s with Putin that if they took one step towards Moscow, one step, that they broke the agreement and that the nuclear arms would be back, the nuclear arms race would be back on in that area. And they did it. And they've pushed right up against the man's country. So, I mean, I don't know. I don't know who's right and who's wrong, but something's got to give before it goes too far.
Well, I don't know. I hope I'm wrong. I mean, I hope I'm right. I just don't see, economic war is one thing, but actually like fighting,
Well,
it's
they're
like
not
I got a
building all that
nephew who's
stuff
old
for
enough to
nothing.
be drafted. I don't want him to go die in Taiwan. I don't really care.
Man, Mark, it's I don't know. I don't even know how to tell you, any other way to think against it, because we really don't have a choice, and you have to fight. If it comes down to it, we got to defend our country.
Yeah. All right. Well, one of the things we can look at here is, within sectors, there are industries, and these are the spiders. This is SSGA. These are the spider ETFs that we look at. These guys down here, these are the sectors. But within the sectors, you have industries. So, for example, in our tech sector, we got the semiconductor industry, we got the software and services industry, we got the telecom industry, transportation. That's going to be part of the industrial sector. We got pharmaceuticals is going to be part of the healthcare sector, XPH. Then we got our banks, internet. That's going to be part of tech, metals and mining, oil, gas, and equipment services. So just be aware that there's a lot of different things you can do here. You got, the S&P is on the top, and then you got your 11 sectors, and then all of those sectors consist of different industries. So in the healthcare sector, we got healthcare services, healthcare equipment. Speaking of the China ETF, let's take a look at that. GXC.
You also have the yin and the yang for bull and bear China.
Now this appears very choppy. See all the gaps?
Yeah.
But this is because this isn't like gaps in your traditional basis. These are gaps because this is a basket of stocks that trade at different hours. So I don't know what the Chinese hours are, but this trades from 9:30 to 4 Eastern time. So it closes, and then whatever goes on in China revalues it, and then it opens the other day or the next day at a different price. So these aren't like your typical like a breakaway gap or an exhaustion gap. There's also this one I like to look at. This is the large cap, and it looks pretty much the same. Yeah, man, it looks pretty much the same. Let's look at some of these. Remember, we were thinking that there's a chance that tech could turn over. So let's look at some of the tech things. Semiconductors, SXD. XSD. Huh. Now this is, I mean, if the sector turns, this looks pretty overstretched. So this might turn more. So that could be a way to play it, is to start looking at stocks look at the semiconductors. If we're right think about it. If the thesis is all right, technology is at resistance and it's overbought, therefore there's a decent chance that it reverses and goes lower. Well, how are you going to play that? What is going to be your most efficient use of capital, right? Is it to buy puts on the ETF? Is it to find stocks that look more vulnerable? That would be my thought. is that you look within the sector. But some people, all they like to do is trade ETFs, and there's nothing wrong with that. But notice how this is, right? Nice round level, 200. People like our nice round levels.
Yep.
Sell it when it gets to 200. So we got support, turns into resistance. So to me, this looks more vulnerable than the tech sector in general, because remember, the tech sector is literally trading at all-time highs, and this is not. So this to me looks like if tech rolls over, this is probably positioned to move more. Software and services, XSW.
And then Avi's got an AXP, and then Heather has a TECS. Hey, and Avi, I want to say something. I'm proud of you guys for finally getting into that hospital and showing the world what's really in that hospital. Congratulations.
All right, so this guy here too is look at this, where he is. Well, I don't know if I guess ETFs are gender neutral, but look where it is. So resistance again. So this looks like it could be set up for a move lower. And which one? American Express?
Yeah, AXP, yeah.
All right, so now let's just remember that it's in the financial sector. So let's just kind of look at financials first, because what goes on here is going to influence what goes on in AXP. So overbought at resistance. What is this doing? Not much this morning. I would say that it'll probably trend higher if the financials stay neutral. But if the financials start to roll over, if the sector starts to roll over, this is probably going to go with it. But from a trading point of view, there's an old saying, the trend is your friend. And as long as it's trending higher, if you're in it, just stay in it. And my trading target would be up around here, 163. But again, this is another situation where we're at a market. We're at a junction in the market where we got a lot of things that are at resistance and a lot of things that are overbought. So if any kind of negative catalyst comes along, like a move up in the interest rates, that could set the stage for, it's like the path of least resistance is lower. You know what I mean? So I think we either consolidate. I don't know. I just think the market's due for some consolidation. But here, that's would be my thoughts on this. If you're in it, I would just say watch the financial sector, because if that starts to roll over, this is going to go lower. But if financials stay neutral, this will probably continue to trend higher, and that would be my trading target there. SMH. So what is SMH? That's the that's the Van Eck semiconductors. Yeah. Okay, so it's going to look very similar to the Spider, because basically they're ETFs that invest in the same things.
Right.
And as we can see, really overbought at resistance above a gap. This could be a potential trade here if the market starts to reverse. So much of it, I think, is really going to come out of what goes on over here in the bond market. Let's see what this is doing. Yeah, so, still kind of trending lower. There's a good chance this thing gets down to 445. 432, which is where we had resistance here. So if this starts to trend lower, I don't think the market will necessarily move higher yet. I do think it just needs some time to consolidate. But if it continues to move lower after some consolidation, probably like early next week, maybe the rally kicks back into gear. But if this kind of goes sideways or starts to move higher because of the fact that we're overbought and we're at these resistance levels, it's a good chance the market comes in a little bit. I don't think it's going to crash or anything like that, but that's just what I'm looking at. So, techs. techs. So this is, yeah. So now if tech really starts to roll, well, if tech rolls over, this would be a good place to be because this is an ETF that uses leverage and it's inverse. All right. So in other words, if the tech sector goes down, this is going to go up, and it uses leverage to make it move by about 3 times as much. Now, you don't need to worry about the leverage. Behind the scenes here, there's some really complicated stuff going on with derivatives and options and futures, and that's how they construct these ETFs. But you don't really need to know that. For the regular person, it's just like trading an ETF. You'd buy it, you sell it, same tax consequences. But this stuff is really great. I mean, years and years ago, when I first started doing this, this stuff didn't even exist. I remember when ETFs first came out, and Mario Gabelli was a member of the American Stock Exchange. And when I started there, I went to this breakfast at the American Stock Exchange. This is probably like 1997. And it was when they were launching the Diamond. So that was the reason for the breakfast, was the launching of the Diamond, which is the ETF, which follows the Dow Jones. So it was pretty cool. I was sitting at a table with, I went to Mario's place. And I was at a table with Rudolph Giuliani, because he was the mayor, Mayor Dinkins, who was the prior mayor, and Paul Volcker, the Fed chairman. So like, there's me with all these like bigwigs, man. I was like, wow.
How old were you then, Mark? 25?
I was probably, well, I should be. I think I was 28.
Oh my God, full of vinegar too.
And I remember talking to the head trader, Irene. I was like, "Yeah, Irene, I got invited to this thing, and they were going to send a limousine to pick me up." And Irene was like, "If Mario finds out you took the limousine, he's going to fire you." He's like, "Take the train and take the subway." So, but yeah, they were going to send a limousine to pick me up. It was pretty funny.
She hooked you up.
Yeah, dude, I know, because I was like, wow, a limousine. I was like, it's going to be awesome.
Mark's like, well, yeah, pouring drinks.
Mario's not that type of guy. But yeah, it was cool. I remember talking to Paul Volcker. I remember talking to Giuliani, and to David Dinkins. Really didn't say much. He was pretty old at that point. But yeah, and then I remember like when they announced us, it's like, oh, because we went up there to ring the bell, and it's like, oh, it was, Mayor, the Honorable Mayor Rudy Giuliani, and Your Honorable this, and Paul Volcker that, and representing Mario Gabelli, it's Mark Putrino.
There's got to be a picture of that somewhere, Mark. So you were up there on the podium ringing the bell on the stock exchange for the Diamond.
I didn't ring it. I don't remember who rang it, but I was part of the crowd up there.
That's insane, dude.
But yeah, so that's right when these things launched, and spiders were like a year before. But now, as a retail trader, you can use leverage. You can, you can do inverse things. You can concoct a strategy where all you use is ETFs. Don't even worry about stocks. Just trade the ETFs, and that way, depending on your style, it gives you less stuff to concentrate on. It's more of like a, the rifle approach as opposed to the shotgun approach. Yeah. So if XLF, well, actually, let's go back to text first. So this is designed to move 3 times in the opposite direction of the tech sector. So if the tech sector goes down 2%, this should be up about 6%. And then what Heather points out is FAS, which is another inverse leveraged ETF, which follows, I should say, trades inversely to the financial sector by 3 times. So this is FAS is to financials as text is to tech. It's based on the financial sector, and it's designed to move 3 times in the opposite direction. So if those financials start to roll over, this thing is going to move higher. If financials are down by 1%, this will be up by about 3%. If they're down by 2%, this will be up by 6%. So it's a good thing to know that this stuff is there. A lot of people don't even know about it. And, the Direxon site, or the Direxon, I should say, family of funds, they have a lot of these inverse leveraged. There's these guys, and I think they're probably, there's these guys and there's ProShares that I think are the biggest inverse guys. But look in here. So you got your biotech, Bear, 3X, high beta bull, your retail bull. So, if you like retailers a lot, instead of buying the retail ETF, maybe you buy the bull. So you got real estate. I mean, you pretty much got anything. And what they also have now is these single stock ETFs, which are interesting. This is like Apple, right? If it's designed to move the same way that Apple does, but 50% more. So if Apple moves 1%, this is going to move 1.5%. If you're negative on Apple and you don't short and you don't buy options, well, you could buy this ETF. This is designed to move in the opposite direction of Apple. It's not leveraged. It's only by one time because I guess of the mechanics of what they have to do to set this stuff up. But you can trade these single stock ETFs on Apple, Amazon, Google, Microsoft, Nvidia, Tesla. So it's just good to know that they're out there. So this is Direxon. They got non-leveraged ETFs. The Direxon Auspice Broad Commodity COM. Oh, and this is the NASDAQ 100 Qs that we look at. Look at this, the Moon Thematic Hydrogen ETF, HGEM. Let's take a look at that.
Mark, what website was that you found those on?
Here, I'll post it. All right. Did that come through? Yeah.
Yep, it went through.
All right. And then there's also ProShares. I mean, these things are all kind of, is one family better than the other? I don't really know. Not necessarily. The one thing you should be aware of though, is before I go on to something else, some of these, like, let's just look at COM. Actually, we can look at this. All right. Well, there's okay volume here. It trades 10,000 shares a day. But if you see an ETF that only trades like 1,000 shares a day or a couple hundred shares a day, then it's probably better to stay away from it, because if you ever need to get out of it, you could really knock the thing down. And there's so many ETFs. Some of them don't, some of them never get traction. and I was going to set up an ETF one time. And well, I mean, not that I was going to set up, I was going to be part of a team that set it up. And, with the legal fees, it costs about $100,000 a year to run an ETF with your legal and your compliance.
Wow.
So if they don't pick up traction, they just end up shutting down. So there's
Right.
a lot of ETFs that end up going out of business. But so, you want to find something that trades at least 50,000 shares on an average day. Look at that. Cure, the healthcare bull. I like the symbols of some of these things.
Yeah, they've done a good job with that.
Right. So this trades about 50,000 shares a day. And you could tell by, if you look at the assets under management, like if you look at one that's really small, like this one is only 16 million. The Final Frontiers ETF, ROKT.
Oh, that sounds cool though.
Yeah, now you see, like, look at this. On an average day, it only trades 700 shares. So you might look at this and think like, oh, gee, that's a great idea. The chart looks good. But, I mean, if you buy 1,000 shares and you go to sell it at the market one day, you can knock the thing down $3 or $4.
Yeah.
So you got to be careful with that stuff. All right, everyone. If no one else has any more questions, I'm going to hit the road. And hello, Sean Savage.
Sean, the good thing is we record them all, buddy, so you can come back and watch them if you miss us. And, guys, we're working on something really cool for the website. I know that it's kind of slow what we're doing, but once we get this final iteration done, you guys are going to be extremely happy with what we provide for you. So have a wonderful day, everybody.
Do you know what the first product ever sold over the internet was?
No.
Back in the 60s? You really want to know? It was a bag of weed.
Was it really?
Yes. It was the students at MIT first product sold on internet. Yes, some students at MIT, I think they bought it from students out in California. They're like, the graduate students.
Yeah.
Let's see, Fast Company. You'll never guess the first thing sold. Well, anyway, I think it was back in, or maybe it was like the first communication of an email.
Was talking about weed.
But all right, I'll find it for tomorrow. But so like I think maybe it was the first thing over email. But I believe it was this, the MIT students and the Caltech students were like working on the internet, and that's like the first message was ever sent was like, "This is a bag of weed." All right, everyone.
Hey man, you gotta get focused.
We'll see y'all tomorrow morning.
All right, thanks guys. Have a
good
day.
Here we go. Oh, I found it. The story of the very first thing sold on the internet, and it talks in here about a bag of weed. All right, we will see you all. Oh, here, RapNet to sell pot. As far back as 1971, students at Stanford and MIT were using the pre-WW RapNet to sell pot across the country.
That's silly as hell.
All right,
Industrious young entrepreneurs.
Yep. All right, man.
Thanks,
we'll see you all. We'll see you all tomorrow.